Pokémon boom wasn't a coincidence. It was ignited by strategic buyouts of sealed products and singles. To truly understand the mechanics of price movement, we decided to step out of the observer's seat and into the driver's side. We staged a targeted buyout on a hyper rare to see exactly how the market reacts when supply vanishes overnight. Is it manipulation or just smart math? The results might change how you look at your portfolio. The most recent TCG Gold Rush was sparked by investors identifying supply chokes in Pokémon. Seeing the massive ROI generated by these moves, we wanted to witness the effects firsthand through a controlled experiment. While this test is ongoing, we are documenting every fluctuation to show our readers exactly how a market reset happens in real time. This isn't just about buying cards. It's about testing the leverage of a concentrated position in a liquid market. To find the perfect candidate, we audited our own January 23rd Hidden Gems report. We looked for a card with a massive delta between its technical rarity and its market price. We landed on Walking Wake X SV Prismatic Evolutions 178 over 131 Hyper Rare. At the time of our selection, near mint NM copies were stagnating around $6. This felt like a glaring inefficiency for a card that should, by all accounts, be worth significantly more. The math behind this pick is undeniable. Prismatic Evolutions is a premier specialty set where loose booster packs consistently command a $10 plus premium. According to TCGplayer data, the pull rate for any hyper rare, HR, is roughly 1 over 180 packs, while hitting this specific Walking Wake is a staggering 1 over 900. When a card's market value is 40% lower than the cost of a single pack, despite being a top-tier rarity, it is the definition of undervalued. To be fair, the card has its detractors. Gold, hyper-rare texturing has historically lived in the shadow of special illustration rares, and Walking Wake isn't exactly a global fan favorite like Umbreon. However, daily consistent sales proved there was a steady baseline of demand. We believe the rarity floor was far more important than the art style preference in a market that eventually corrects for scarcity over time. What is most shocking is how little capital it took to move the needle. With a total supply of roughly 200 copies on TCGplayer, it cost less than $800 to buy out half the market. When you look at higher-funded investors, it's easy to see how single cards experienced such violent price swings last year. This highlights how easily a market can be manipulated or reset, though the true test remains whether the buyers will match the new price floor in the coming weeks. This raises an important question. Is this ethical? The TCG market is an open marketplace, and this experiment illustrates how capital can be used to highlight value. We aren't hiding our moves. We are demonstrating the very market leverage we wrote about earlier this week. You shouldn't have been able to buy a 1 over 900 pull rate card for less than the price of the pack it came in. We simply corrected the error. While some call this market manipulation, we view it as an illustration of leverage in an open market. This experiment mirrors the poke bro moves many complained about in the One Piece TCG. However, looking back at $150 One Piece boxes containing 1,000 plus hits, it's clear that wasn't just hype. It was a legitimately undervalued TCG. You simply cannot ignore the math when a card's pull rate is this difficult. Even with the market at all-time highs, this level of volatility might be the new normal. Opportunities to find undervalued gems are always there for those willing to do the math and take accountability for their own portfolios. Don't just watch the trends. Understand the mechanics of supply and demand so you can make the moves you see fit. We'll be checking back soon to see if the market accepts our new $8 plus floor. To catch the follow-up story, grab a free subscription at tcjournal.io. You'll be the first to know about updates on this and other top stories.